$33.4 billion for AES. Tell me again how AI is the only thing driving deals right now.
Because AES powers the data centers, Nate. It is an AI play in a hard hat.
Oh, come on, you are stretching. Next, you will tell me Danone buying Huel for $1 billion is an AI play because software engineers drink it.
No, that is just a crime against food. But Netflix abruptly walking away from the Warner Brothers bidding war? That is the corporate theater we actually need to unpack first. The rundown.
$33.4 billion. That is not a toe in the water. That is a cannonball into the deep end.
Global Infrastructure Partners and EQT buying AES. It is massive, and it completely validates this risk-on mindset everyone keeps quoting in their morning notes.
The regulatory clouds have parted, and all that private equity dry powder is finally catching fire. I feel like I am back on a trading floor.
Please do not wear a fleece vest to the studio again, but look at what they are actually buying. It is not just power generation, it is the grid capacity for the AI innovation supercycle.
Exactly. Everyone wants to own the toll roads for artificial intelligence, which explains Legrand quietly sweeping up Keydak in China and TES in the UK.
2 data center acquisitions in 1 week. Legrand used to just make fancy light switches. Now they are trying to wire the entire global AI build-out.
Sell shovels during a gold rush? Or in this case, sell server racks. Speaking of buying sprees, Zurich Insurance is taking Beazley for $10.8 billion.
Classic scale play, but I am way more fascinated by Danone dropping exactly $1 billion on Huel.
The Tech Bro protein sludge?
It is a meal replacement, Nate. Respect the pivot. Danone is desperate for growth, and protein is the only thing moving off grocery shelves right now.
$1 billion for powdered oats? I read the release, and the multiples are completely absurd.
Well, let me give you something even more absurd. Paramount Skydance officially won the bidding war for Warner Brothers Discovery.
Only because Netflix abruptly grabbed their coats and walked out the back door. Netflix got scared of the integration risk. Paramount actually has the stomach for it.
Oh, come on. Netflix did not get scared. They finally read the footnotes on the linear television debt sitting on Warner's balance sheet and realized they would be buying an anchor.
Paramount just bought a mountain of premium IP.
They bought a mountain of dying cable networks, just like we're going to see with the energy sector tomorrow when the market digests that proposed $58 billion Devon Energy and Coterra merger.
Especially with the Middle East tensions threatening to spike inflation again, we will see who is right when the first earnings report drops.
Fair enough, but we need to talk about the real wealth grab happening today.
You mean Brookfield officially closing their $3.2 billion acquisition of Just Group?
Exactly. Let me pull up these filings because the structure they used to get this done is fascinating. The big one.
$3.2 billion for UK annuities? It's not exactly a sexy headline, but Brookfield Wealth Solutions swallowing Just Group is the perfect snapshot of M&A right now.
£2.4 billion, if we want to be accurate with the local currency. But yes, Brookfield is aggressively vacuuming up assets. I read the entire filing this morning, and they're pitching this purely as a natural scale play.
Because it is. Look at the macro environment. Analysts are tossing around the phrase risk-on mindset like it's candy. Private equity has absolute mountains of dry powder right now, and the regulatory clouds have finally parted. Brookfield is just the biggest bear waking up from hibernation.
I don't buy the risk-on narrative for this specific deal, Nate.
Oh, come on, they dropped over $3 billion?
Right, but look at what they bought. Just Group is a retirement specialist. Annuities are literally the business of pricing mortality risk. That's not risk-on. That's locking in incredibly predictable, boring cash flows. They're just buying a giant piggy bank to fund their broader empire.
Boring cash flows are the ultimate banker aphrodisiac, Maya. You know this.
Fair point, but the actual risk-on behavior is happening over in infrastructure. Look at what Global Infrastructure Partners and EQT just did with AES Corp.
$33.4 billion. Now that's a staggering number.
Exactly. That's where the real money is flowing. The industry watchers are calling it an innovation supercycle. It's entirely about physical AI infrastructure now. data centers, specialized semiconductors, and most importantly, the power grid to run all of it.
Which perfectly explains Legrand quietly buying up Keydak in China and TES in the UK. They're expanding their data center footprint everywhere. Everyone is trying to own the picks and shovels for the AI gold rush.
And the power plants. AES is a massive power company. You can't run a trillion parameter AI model if you can't plug the server rack in. GIP knows exactly what they're doing.
So Brookfield buys the boring retirement cash flows and GIP buys the grid. It's a classic barbell strategy across the market.
See, now you're sounding like a pitch deck again.
I can't help it. The muscle memory kicks in. But speaking of weird acquisitions, did you see Danone bought Huel for $1 billion?
$1 billion for powdered tech bro food. I genuinely laughed out loud when I saw the press release. I guess liquid protein meals are the new yogurt.
Honestly, I would rather drink a lukewarm Huel than deal with the absolute drama happening in the media sector right now.
Oh, you mean the bloodbath over at Warner Brothers Discovery?
Exactly. Netflix abruptly walking away from the table was wild. We really need to talk about how Paramount Skydance actually pulled that off. Voices. So the analysts are calling early 2026 a quote-unquote risk on environment. They're citing regulatory predictability and just mountains of private equity dry powder.
Risk on is putting it mildly. Did you read the note calling this an AI innovation supercycle?
I did. I actually love that framing.
Oh, come on, Nate. Innovation supercycle? It's just a slick banker rebrand for buying concrete and copper wire. Look at Legrand grabbing Keydak in China and TES in the UK. They're buying server racks and cooling systems. It's not exactly flying cars.
See, I have to push back there. You can't run the flying cars without the power grid. That's why global Infrastructure Partners and EQT are teaming up to buy AES Corp for $33.4 billion. That is a massive bet on grid infrastructure. Power is the new compute.
Sure, power is compute, but throwing $33 billion at a utility company doesn't magically make it a tech deal. They're just trying to deploy that dry powder before the music stops.
Spoken like a true skeptic. But you have to admit the animal spirits are back across the board. Look at media. Paramount Skydance finally won the war for Warner Brothers Discovery.
Right, but only after Netflix abruptly walked away from the table.
Exactly. Netflix pulled a total Irish goodbye. They looked at the linear TV assets, checked their watch, and just slipped out the back door.
Which is honestly the smartest move they've made all year. You don't buy a melting ice cube when you're trying to fund an AI supercycle.
Fair point. Speaking of boiling oil, tomorrow the market has to digest the $58 billion Devon and Katerra merger.
The timing on that is wild. Middle East tensions are spiking again, so the math on that deal is literally changing by the hour.
We'll break down exactly who wins if energy prices jump right after this. Spill the tea. I still can't believe Netflix just walked away from the Warner Brothers Discovery table like that.
Oh, come on. You really thought they were going to swallow that much legacy cable debt?
Yes, because they need the IP. Paramount Skydance ends up walking away with the prize and Netflix just ghosts the bankers? It's peak corporate drama.
It's peak financial discipline. I looked at the debt structuring on that Paramount Skydance offer. It's aggressive. Netflix did the math, realized they were buying a melting ice cube of linear TV, and backed out.
See, there's your tech bias showing you hate linear. But Paramount Skydance just bought a content fortress.
A heavily leveraged fortress. But fine, let them have their risk-on moment. Private equity has so much dry powder right now, they're basically looking for anything to ignite.
Speaking of igniting things, did you see Danone bought Huel for $1 billion?
$1 billion for tech bro gruel. I actually laughed out loud when that press release hit my inbox.
Hey, don't mock the liquid lunch. Half my old banking bullpen survived on that stuff during pitch season.
That explains so much about your former colleagues. But seriously, $1 billion for protein powder while we have $33.4 billion flying around for AES Corp? The scale of early 2026 is just totally warped.
It's the innovation supercycle, Maya. Everyone is scrambling. Look at Legrand grabbing Keydak and TES just to get a foothold in data centers.
Which brings us to the actual heavy hitters. If you think the streaming wars are dramatic, wait until we talk about what's happening in AI infrastructure and energy.
Exactly. $58 billion on the table for Devon and Katerra. We need to unpack that. Tomorrow's radar. Everyone is going to be staring at the energy boards tomorrow morning, trying to digest this $58 billion Devon and Katerra monster.
I am actually fading the energy hype. Yes, the Middle East is volatile, but the real momentum tomorrow is the AI infrastructure supercycle.
Fading a $58 billion merger, spoken like a true tech reporter.
Look at the filings. Legrand just quietly snapped up Keydak in China and TES in the UK. Data centers are the new oil, Nate.
Okay, sure, but you can't ignore the private equity dry powder finally waking up. Early 2026 is pure risk on. Speaking of risk, did you see Netflix actually walked away from the Warner Brothers Discovery table?
Paramount Skydance takes the crown. I am genuinely shocked Netflix just completely abandoned the deal.
They probably looked at the debt load and decided to go buy a data center instead.
Or $1 billion worth of liquid protein. Danone just bought Huel for exactly that much.
Tech bros drinking Huel in their new data centers, the future is beautiful. We will track the Devon fallout tomorrow and see whose prediction holds up.